Welcome, my friends. There continues to be more drama coming from Meta. If you follow this channel, you already know that Meta is laying off 11,000 employees. Meta CEO Mark Zuckerberg made the formal announcement last week. But now, there are unconfirmed reports that Meta CEO Mark Zuckerberg might resign. Before you get too excited, keep in mind that these are little more than swirling rumors at the moment. A year ago, this would have been unthinkable. But Meta has just gone through what is perhaps the worst year imaginable. Shares in Meta are down almost 75% in the past year. Revenue has declined in each of the past 2 quarters. The past 2 quarters' earnings calls have been unmitigated disasters. Wall Street analysts are beside themselves regarding what to make of the company's future. On that one hand, the mobile ads business is highly profitable, as is the overall company. But revenue is shrinking and not growing. More importantly, Zuckerberg is betting the future of the company on the metaverse. The metaverse is new, unproven, and mostly not even in existence. And Meta is losing billions every quarter building the metaverse. Meanwhile, layoffs continue at Meta, and other big tech companies have been ongoing since the spring. The world is still reverberating from the 50% layoff at Twitter. Since then, Twitter has been in some version of chaos. But Twitter is not profitable, and Elon Musk said that Twitter suffered a major revenue collapse in Q3. So Twitter might be in freefall for all we know. Is that what is in store for Meta? Mark Zuckerberg made it clear that the future of Meta is the metaverse. But that this is a very long-term investment. So, what does this mean for Meta? What does it mean for big tech companies? What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Rumors are now circulating that Meta CEO Mark Zuckerberg plans to resign. According to unconfirmed reports, his possible resignation from the company would come in 2023. As you might imagine, word has been spreading today like wildfire. As it turns out, talk about it has been circulating for a while, among stakeholding groups, employees, stockholders, competitors. Everyone is wondering whether it is true or not. Zuckerberg's spokesperson, Andy Stone, has denied the possibility, however. But unconfirmed reports mention that a source on the inside of the company has said that it is true. As you all know if you follow this channel or the stock market, shares in Meta are down about 70% this year. And there is immense pressure on Zuckerberg to re-energize the stock. Nobody knows for sure whether it is true. But, the rumors have certainly caused a stir. According to the rumors, Zuckerberg had reputedly set a termination date of sometime in 2023. That decision to resign, if it indeed was made, would be understandable. Meta is facing challenges like never before. The company's core business has been in decline for at least the past 2 quarters. Billions are being lost every quarter to build the metaverse. The metaverse is the brainchild of Zuckerberg, and he insists on investing heavily in it. Thousands of documents have been leaked by Frances Haugen. She is the former product manager for Zuckerberg. Haugen has tried to expose what she considered a crisis of morality and ethical decisions inside Meta. Zuckerberg has faced heavy criticism from Wall Street analysts. Mostly, this is because of the overestimation of Meta's future growth potential and the mounting losses from the metaverse. Some observers are concerned that Meta brand might be ruined by the financial troubles at Meta. No one knows since, like the rumors of his resignation, the future remains uncertain. If you follow this channel, you already know that Meta is laying off 13% of its staff. That amounts to more than 11,000 employees. Shares of Meta rose by almost 8% following the announcement. The layoffs come during what is, perhaps, the roughest of times for Facebook parent company Meta. If you recall, Meta gave pitiful Q4 guidance in its Q3 earnings call. The guidance, and, frankly, comments from Zuckerberg basically spooked Wall Street analysts. Shares in Meta sank nearly 20% after what I would call a disastrous earnings call. Wall Street analysts have been concerned about Meta's rising costs and expenses. Those expenses jumped 19% year over year in Q3 to $22.1 billion. The company's overall sales declined 4% to $27.71 billion in Q3. Q3 operating income fell 46% from Q3 of last year to $5.66 billion. The verbal exchanges between Wall Street analysts and Zuckerberg during the earnings call showed just how different their visions for Meta are. "I want to take accountability for these decisions and for how we got here," Zuckerberg said. Zuckerberg and Meta are basically all in on investing in the metaverse. In a nutshell, the metaverse is a yet-to-be-developed digital world. The metaverse can only be accessed via virtual reality and augmented reality headsets. This is a major bet on the company's future, and Meta has invested $9.4 billion so far in 2022. What is more, losses are expected to grow significantly in future years. Meta plans to focus our investments on a small number of high-priority growth areas during the next year, Zuckerberg told Wall Street analysts in the Q3 earnings call. That means some teams will grow meaningfully, but most other teams will stay flat or shrink over the next year, Zuckerberg said. In aggregate, we expect to end 2023 as either roughly the same size, or even a slightly smaller organization than we are today, said Zuckerberg. Meta had around 87,000 employees at the end of Q3. And Meta is now the worst performer in the S&P 500 so far this year. Many tech companies of all sizes are announcing layoffs this year. Twitter just rocked the tech world on Friday with a massive 50% layoff. Lyft cut 13% of its employees. Amazon has cut 10,000 employees. And, of course, these layoffs come at a time of strong macroeconomic headwinds. If you follow this channel, you already know the economic narrative of the day. Inflation is raging in most countries of the world. Central banks in most countries are aggressively raising interest rates in order to fight inflation. Despite all of that so far, soaring inflation and Fed tightening persist. And the United States is teetering on the brink of a recession. A growing number of companies are cutting their payrolls. Most CEOs believe that a recession is coming and want to prepare their companies for it. So, people are feeling uneasy about the security of their jobs. Consumers are pulling back on discretionary spending. Corporate marketers are cutting back on ad spending, especially online. And ad spending is the lifeblood of most big tech companies. Zuckerberg's message in the earnings call went over like a lead balloon. It was somehow assumed that Meta would be better with a smaller, quieter layoff. But, now that Twitter has set a new precedent, Meta could be seeing things differently. Prior to last week, a huge layoff could be seen as damaging to the brand of a big tech company. Now, the opposite is probably true. This might be especially true when it comes to comparing one tech management team to another. Because now that Twitter is owned by Elon Musk, all other big tech CEOs will be compared to Elon Musk. So Elon Musk has the courage to cut 50% of the employee base. How much courage does Mark Zuckerberg have by way of comparison? And Google CEO Sundar Pichai, for that matter. So, in many ways, Friday might have been a major turning point for tech companies. Now, the bigger the layoff, the better the company and the stronger the CEO and management team. It is not just Twitter. Many Silicon Valley companies are gearing up for recession with layoffs. Big tech firms have already announced many hiring freezes and layoffs so far in 2022. There seems to be a normal progression of events. First, a hiring freeze is announced. Then, job offers that have already been made are rescinded. Then, layoffs are announced. And, if things really go from bad to worse, a second round of layoffs is announced. Many smaller tech companies have begun cutting down jobs. All of these companies are citing deteriorating economic trends and a weak macroeconomic environment. Netflix has cut 450 jobs so far this year in 2 rounds of layoffs. Snap, owner of Snapchat, announced a 20% reduction of employees. This amounts to approximately 1,300 workers. Snap also initiated a major restructuring of their online platform. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.